if you've joined me in previous webinars, you'll know what I normally do. I'll just ask for markets that you'd like me to analyse, and I will do my best to go through them, show you how I do my analysis, and try and decipher what's going on and try and figure out what I think at least will happen in the next couple of days. I tend to look quite short term, so usually over the next couple of days, maybe a week, but I don't tend to go much further up than that, purely because the reports that I write, my clients don't look much further than that. But if you've got any markets you'd like me to analyse, just let me know. I've got a cable up here at the moment, pound versus the dollar, so I might as well kick off with that one. Pound versus the dollar, so this is a weekly chart. This is one of the markets that I do look at every day, so there'll be some lines on here already. But this is the weekly chart. Let me just throw some bits and bobs up here. Start with some trend lines. Let's see what works here. Not really that one. Probably this one will be better. Join up these peaks, see what we get. Okay, so broadly speaking, you can see we're sort of stuck in this channel on the weekly chart. This goes back to, let me see, May 2011, so almost 2.5 years back. So it's quite a big picture. But you can see that we're approaching the upper end of this channel that we've been in for the last 2.5 years. The trend line comes in on the weekly chart at around the 162.5 area. So we haven't quite made it there yet, but we are getting close to it. The longer-term Fibonacci resistance of the 61.8 resistance level of 160.08 has been broken this week, quite decisively after yesterday's FOMC announcement. So that's quite positive still. So there is every chance we can make it at least as far as 162.5 level. Yeah, this is pound versus dollar at the moment I'm covering, just to answer that question, on a weekly chart. So yeah, we're heading up towards that 162.5 trend line. At the moment it does look like we could get there. We are a bit overbought on the weekly stochastics, but nevertheless it looks quite strong. Very nice uptrend. Yesterday we got a boost as we pushed through 160.08. So we'll go shorter term now. We'll have a look at the daily chart. This just goes back to the beginning of the year, really. You can see again we pushed through another good, some trend lines here around. They're all around the sort of 160.25 level, 160.20, 160.30 area, and I actually thought yesterday that would hold it. But what with the FOMC giving us a boost, we pushed well through there and through the 160.46 area, which would have been a stop level for, above those trend lines, as I wrote in my reports yesterday. So we've pushed through there. So this area now, of course, resistance now acts as support. So you've got good support around the 160.40, 160.30 area from these trend lines and from this Fibonacci level. We've managed to hold above there today as we consolidate yesterday's gains. I've got my one eye on the stochastic showing us we are overbought, but I'm not going to pay too much attention to that at the moment because we are in a nice strong uptrend. We got a big boost yesterday, so until we get some sort of sell signal or some sort of confirmation at the top, probably best to ignore that at the moment and continue to buy into dips. I think that's pretty much all we can gain from the daily trend. But you can see that these two black lines here, we were holding a very nice steady uptrend channel. In fact, I'm just going to blow that up a bit so you can see it a bit more clearly. Move that out of the way. You can see we were holding this nice steady channel here, and this uptrend was nice and steady, nothing too steep. And I, for obvious reasons, thought that we'd hold here, especially with this longer-term trend line going back to May. That looked like we were really going to hold there, but anyway, we burst through it, as I say, on the FOMC. So this is now a positive breakout, and despite the fact we're overbought, can't really get negative at this stage. The 4-hour chart, which is about the short-term I like to get, again, is worrying, slightly worrying because we are overbought on the daily stochastics, which is probably why we've seen a bit of a pullback today. But I wouldn't be selling this market purely on the basis that we're overbought. Market. You can see I've got some Fibonacci levels on here. We've got a 160.55 support, which is just held. I think today's low was only a fraction above there. 160.58. Okay, so that level's held quite well. I've also got 160.96 as a little level on the upside, and that's just held this bounce. So these levels are working quite well. So we've just got to watch these in the short term, 160.55, 160.96. But we could continue a little bit lower. I'm not expecting a huge sell-off just after yesterday's rally, but maybe a bit of consolidation. So if we start dipping below 160.55, wouldn't be surprised to see it down to the 160.00, 159.90 area. That's this bigger Fibonacci support here. I would suggest that's actually not far off where we started yesterday's rally either. So if we get down to there, I would suggest that's probably a buying opportunity. Probably worth it. I would guess we'd see a decent bounce off there if we fall as far as that 160.00, 159.90 area. If that doesn't happen and we push up through 160.96, well, 161.63 was yesterday's high. That's the obvious upside target resistance. What happens there would give us some sort of clue. I mean, if we did rally back up and fail there, then maybe that would give an indication that we will come back to that 160, 159.90 area. That would be a very, very small double top, which would project us down to this level. So, but it's a bit wait and see at the moment, really, after yesterday's big move. Once you've had this big move, it's probably a case to consolidate and then see what happens next. But as I say, not really looking for any big sell-off. I'd only be worried really if we started getting below that 160.00 area. That would be a slight concern. We've got our daily high here on the 16th, so that was beginning of this week, wasn't it? The 16th. Yeah, that was Monday's high. Monday's high was 159. Let me just check. 159.63. So I suggest if you're buying it down to the 160 level, stop below 159.60 for a short-term trade, looking for the bounce. But then if that fails, we're back within this channel, and I would start to be a bit more negative and look for continued profit taking. I think that's all I can really say on cable at the moment. Obviously, we had some big moves yesterday, so really it's just a case of consolidating these big moves in a lot of these markets and seeing where we go from here. But just because we're overbought anyway, not reason enough to try and pick a top, I would suggest. Euro versus dollar, always a favourite, so we'll have a look at this one. Then we'll start with the weekly chart. Here it is. Okay, so I'll just blow this up a little bit because I don't think we need to go back as far as 2011. Okay, so this takes us back about a year, and you can see that we're really only range trading on the grand scale of things. I mean, 2013, we got up to 137.10, and then we dipped down to this 127.5 area where we found a good support, and we're back through it again. Just note that we pushed yesterday through the 200-week moving average at 133.50. So that's quite positive, and obviously continuing for a nice uptrend that we've seen throughout the summer. There was a risk that we were going to top out, but well, anyway, we're through there now. So looking quite positive on the daily chart, not even particularly overbought. So there is plenty of room. We could, there is all the reason that we could see a retest of this year's high at 137.10. We're not that far off it. 150 pips, something like that. What's the daily chart telling us? Well, yeah, first thing is we are overbought, but again, wouldn't pay too much attention to that. I don't think that's particularly significant, especially as we've traded well through this trend line yesterday, which came in at around a 134.65 area, 134.70. So that's pretty bullish. We closed above there. It just shows that we are continuing this uptrend that we've seen since early July. And we pushed through that Fibonacci retracement level of 135.00, 135.05 area, and we're just sitting above there. In fact, today that's acted as quite good support already. As you can see, we've just managed to sit above that line, quite clear on the daily chart. So, yeah, all looking positive. Wouldn't be looking to pick a top really in the euro. Okay, so I was saying before the sound died, nothing to say we're topping out and that we're going to see a big sell-off. Just a bit of indecision there on this last 4-hour candle here, as you can see. We're just hovering around the middle of the candle. Just got one eye on this overbought stochastic on the 4-hour chart. So yes, we could see a little bit of profit taking. I'm just going to flick back to the daily chart because we had a bit of. It's not the biggest support in the world, but it is working today. But don't rule out a break lower on some profit taking. Maybe back to the 134.60 area. I would be looking for that to hold. I wouldn't be surprised to see a good bounce off there if we see that. Well, probably not today, but who knows maybe a bit of profit taking before the weekend after such a good run over the last couple of weeks. But just bear in mind, if we start drifting below the 134.5 area, where you can see that 133.90 is good support. This also ties in quite nicely with this area of sort of congestion here. We've got a high on the 16th of 133.85, so that ties in quite nicely with that as well, 133.90.85. And I would suggest if we fall that far, maybe next week, then that's probably a nice little opportunity to try some longs. You can keep it quite a tight stop there because you can, below the 50% at 133.36, you can stop out, and then you can see that's quite good support in its own right. Okay, so that's probably about what I can say on the euro, but looking pretty positive and never wise to fight the trend really. If there's anything else you'd like me to look at, please just type it out. But in the meantime, I'll look at some other pairs. Yen's one that I follow quite closely, dollar yen. So this is the weekly chart. Now this was looking quite positive, but we've come to a bit of a halt. Anyway, obviously we've had a big rally, and I'm just going to draw some trend lines from here. Okay. I'll put these trend lines on the daily chart and we'll be able to see it a bit more clearly. But you can see what's going on here. We've had a consolidation period really for quite a long time, for the last 6 months almost really. And we started to break above there, and I thought that was going to push us higher, but we had a dip back this week, only as far as 97.75, 97.75. So we've managed to stay above this trend line, which is around the 94.40 area, and we pushed back up through there again yesterday. So that was an attempt to push below there, which wasn't held. But let's look at the daily chart because that whole thing's a lot clearer on here. Okay, so we got a bit overdone, we got a bit overbought. We pulled back. Sorry, there's quite a lot of lines on this. So just let me open this up. Right, hopefully that's a bit clearer. As I said, there's the triangle. You can see it quite clearly. This is this upper line here. 100-day moving average around 99.08, and we broke below that, but we haven't actually. Well, we didn't hold below that on a closing basis until yesterday, 18th. Yeah, so we've managed to come back and retest that trend line quite nicely. Dipped below it, but we managed to close above it. So we unwound this overbought stochastic on the daily chart with this little pull back to the trend line. This is quite classic. You break, you come back, you test it, and then you rally off again. Yeah, well, I think you're right. As Ray says, I think we're ready to move up again. Well, it's pretty textbook as far as technical analysis goes. You break out, say you come back, you test the trend line. We did it the first time here, in fact. That was on the 6th of September. Rallied up, couldn't hold it, got to overbought. We've come back down, retested it. So yeah, I think you're right. It is ready to move up again, and already we've seen a really nice bounce today off that trend line. In fact, the low is pretty much bang on that trend line. So we're pushing above now the 100-day moving average, which is just above the 99.00 at 99.08. Sitting nicely above there, so it's all looking positive again. We've unwound that daily stochastic, which was overbought, so now we can push up again. I mean, that's probably enough of an unwind when you bear in mind the relatively positive outlook. And if we get through the high of the last 2 days, which is 99, let's have a look. 99.33, 99.38. So this is going to be a little bit of a barrier, and it is already. What's the high today? 99.31. Okay, so we've got to basically get through 99.40 to push on again, but that does look like that will happen. Just let me remind myself what the. How's that? Sound okay again? Keep losing the sound for some reason. Is that working now? Okay, you're back on. Good. Sorry about this. I don't know what's causing it. Okay, so yes, we've got the high for the last 2 days around 99.40. We've got Fibonacci resistance at 99.46, 99.51. So this is going to be our sort of target. Not only our target, but it's also a decent barrier. I mean, you can just you can just see as you look along that line how we held up on the upside and on the downside. That line is clearly very much sort of support and resistance area. So anyway, let's see if we can achieve that, at least get to the 99.40, 99.50 area and see what happens there. Maybe a little pullback in this short-term downtrend. I'm just going to throw a trend line on here and just see where this is pointing. No, nothing really significant there. Yeah, the fact that we've broken above that very, very short-term trend line, that only goes back about a week or something. But you can see that that's another positive, having got through what was 99.00. That 99.00 area, that ties in with something I saw in the daily chart as well. Oh yeah, the 100-day moving average. Okay, so the idea is now to hold above 99.00 really, and push on to 99.50. As I say, we'll probably struggle there, but I wouldn't be surprised to see it continue higher. It's all looking pretty positive. And if we get through there, there isn't really an awful lot to get us through up to 99.90, 100. Okay, I think that's probably it. If we do dip back, you can see that we've got some fib support around 98.80, 98.75 area. That's actually held this last candle in the 4-hour chart. I mean, you can just see, I'm moving my cursor around here, you can see that we've got some good support there just from these candles here. At 99.80, 98.80. Let me just see if that ties with anything here. It does actually. We've got 55-day moving average around 99.80. And also a much longer term Fibonacci support around 98.75. So yeah, that could act as good support now as we probably start to build a little uptrend going forward. So yeah, all in all, fairly positive for the dollar yen. What else can we have a look at? Okay, let's keep going. See if we can make this work. Back to what are we looking at? Aussie dollar. Okay, so right. Let's have a look. This week's low is 92.46. So that's pretty much around that fib level. You can see we tried to push through 92.60 last week and we closed above it. This week we managed to push through it. We've hit the next target of 95.10. That was our next Fibonacci target for the weekly chart. And we've hit that quite nicely. High this week is 95.28. So we ticked just above there, only by 18 pips or something. And we're just holding below there at the moment. I'm guessing the daily chart's going to show us a bit overbought. It is. And of course, I'm going to draw these fibs back on the daily chart, just to clarify. Okay, so yeah, 95.10 area. As I say, we've got to 95.28, but you can see that we are stalling at this fib level. There isn't anything else really on there, but considering how overbought we are, and we are really still in some sort of bear trend. You would expect that if this is a bounce in the bear trend, you would expect that 38.2% level to hold, and so far it is. So I would suggest that the risk is now to the downside. This is just a bounce in a bear trend. I can't really get any trend lines on there. There's nothing really I can see trend line wise. No, nothing really at all. Not helpful. However, okay, well anyway, we broke out of that triangle formation and plunged, and we've managed a good bounce because we got so oversold. So back to the daily chart. Yeah, really, I think all I can say at this stage is that we're risking the end of a rally. We've got to 95.10, and we're risking a sell-off from here, some profit taking after this bounce in the bear trend. So this will take us back probably down to 93.50, 93.45 area, which is 100-day moving average, and there's a bit of activity around that level. What's this high? 93.50. So where did we get to? Yeah, 4-hour chart, looking very overbought. Hope I don't trade my computer. Yeah, you're not wrong there. Right, we are looking overbought, and I think we're probably going to stall around this 95.10 level anyway. Trying to get back to what I was saying, I think we're probably going to stall here. We are already on this 4-hour chart, and I wouldn't be surprised to see a bit of profit taking. I mean, I wouldn't be surprised to see us come back to this 94.00 area. 93, 94.00, 93.90 looking likely. and who knows, maybe even back to the 92.58. But I guess just to summarise, probably not worth holding any longs anymore at the moment, unless we do see a decent push through 95.28, and then you might want to buy back into longs again. That's probably enough said for that one. Canadian. Yeah, it's a tricky one, this one. I didn't enjoy analysing this one last time round, so let's see what's going on anyway. Okay. Well, we were in an uptrend. We're not now. Oh yes, we are. There you go. I think that's the important bit to notice. I'm just going to expand that out. Okay, so for a year we've been in a nice steady uptrend, nothing dramatic, but we've been in a nice steady uptrend. Anyway, we've got something. It's not really a double top because that high was 106. What was that? 106.09. 106.09. Then the next high was 105.68. So no, that doesn't really count as a double top. But certainly the failure to retest that high saw us sell off, and now we're testing really quite important support. Fib support at, well, 101.80-ish. And of course, this week's low is 101.82. So we just tried to break below that 1 year trend line, but it's holding. And I'm guessing that we're going to look quite oversold in the daily chart. So I'm guessing that we could hold this support line and maybe start to rally up. I'd be looking to buy after a good daily reversal candle. Well, I would agree with you there. So let's have a look at the daily chart and see if it's giving any indication to buy it. Actually, it's 4 hour, flick to the daily. Okay, interesting. We've also got the 200 day moving average here at 102.10. So it's all tying in with that level. Yesterday's low was 102.02. Today we managed to get down to 101.82, yeah, which was bang on that 101.80 fib support. So we've just blipped below the 200 day moving average just to squeeze out a few weak longs who were trying to pick a bottom around there. But we're just holding around that 200 day moving average. So today will be quite interesting where we close. We're very oversold short term. If we could just close above yesterday's close, which was 102.26, that would be quite positive. We would have spiked lower, tested the 200 day moving average, tested the Fibonacci support, and then closed above yesterday's close. I would say that would be raise reversal candle and good enough to give me some confidence to buy into this market. But really, if you're buying it here, it's a fairly low risk reward trade. Don't forget the nice big 1 year trend line here, the Fibonacci support. We've blipped below that today and now holding above it. So really, you know where your stop loss is. Your stop loss is somewhere below 101.80, wherever you can hold it to. But even if we get through there, you know, you're looking at 100 week moving average and 200 week moving average at 101.10, 101.7. So, you know, probably looking to buy it here again, maybe. Don't know. That might be a little bit more risky once we've broken the uptrend line. But, okay, I think you see what I'm saying. Buying it around here looks pretty low risk to me. Just going to stick some trend lines on this daily chart. Perfectly. And, you know, the rule is stay with the trend and buy it when it hits the trend line support. So that's what we're in the market for. You know, if technical analysis is your thing, then this is one of those opportunities where you have to go and buy it, basically. I can't really say any more on that. You can have a pretty tight stop. And the 4 hour chart is, yeah, that candle's looking more positive, isn't it? This 4 hour candle. So if we were to close above 102.17, that would be quite positive. We're not far off it now. This candle started at 12 o'clock, so we've got 30 minutes to run. I mean, if we could close in 30 minutes above that 102.17, that would be pretty positive as well. So could trade that back up to 105 level. Yeah, sure, why not? Let's have a look. Let's get some targets on board. Certainly 102.70 would definitely be our first target. I mean, that ties in really nicely with some previous lows here. So risk reward wise, if you're buying it even here at 102.15, you've got maybe a 50 pip stop. I mean, that would be more than enough. That would take you to 101, 65. So that would be a 50 pip stop would be good enough. And you're looking at some decent upside, at least 50 pips and potentially more. You don't really need to run a 50 pip stop to be fair. You could get away with 40, I would suggest. And anyway, on the upside, at least a 50 pip profit. But we could even push through there and go up to 103.25. Something to my stochastics study. Having a technical nightmare today. There we go. Right, 4-hour chart. Yeah, and a 4-hour chart also getting a bit oversold. So, all in all, I wouldn't be short, and I probably would be trying along here. Yeah, it's all pretty, that's pretty clear. And yeah, if we start heading below, 101.75, then 101.70 maybe, then you want to be out of that position because we'd have broken the uptrend. Okay, I think I've said enough about that. That's all pretty clear. What was that market we were looking at? Canadian. Okay, that's quite interesting. New Zealand dollar is one I get asked for quite a bit. This is the weekly chart I have up here now. So what is it saying? Okay, well, we've just been going sideways for 2 years, really, on the grand scale of things. Very much stuck in a range. Let's throw some fibs on, get an idea. Okay, well, weekly chart's not saying much, but we're heading up towards the upper end of the range. We're sitting above the 100-week moving average. Yeah, we've broken out of the range. I mean, you can see here, this what's that high? 81.70, 81.60, 81.60. Okay, so that's really held us back for the summer. In fact, that was all around the 81.60 level. That was holding us back, 81.50, 81.60. And we've now managed to push through there this week, so pretty positive. Nice uptrend since the beginning of September. Very strong uptrend, in fact. Any reason to get in the way of that? I don't think so. We are overbought on the daily chart. But we're nicely through the 61.8, which is 82.97. We're well through there. That's 78.6%, 84.64. That's going to be a bit of a problem when you consider how overbought we are. The high at the moment, 84.35. Are we going to run out of steam? What you don't want today is a close below 83.82. 382. That can't be right. No, it's not. Yesterday's open, 81.73. Yeah, I wouldn't really want to close below yesterday's open, 81.73. And today's open was also, hang on. I'm not getting this right. Yesterday's open, 82.33. Today's open, 83.43. That can't be right. Sorry, getting all this wrong. Yesterday's close, 83.42. That's right. Today's open, 83.43. Okay, so that's the area we have to watch for today at least. The 83.40 area, close below there wouldn't be very good. We're quite a way off there, so I'm not too concerned about that. But if I saw a close below 83.40, I would start to get worried with this being so overbought and near the upper end of the range. It's getting a little bit risky to be long this. Let's see what the 4-hour chart's saying. Something's telling me that this is a little bit risky. Ray's saying it could take a dive soon. Well, can't disagree with you. I don't know whether it's going to absolutely plunge, but some profit taking at this stage wouldn't be a huge surprise, I've got to say. Something's telling me that this is getting a little bit overcooked. Let's just see where we are. Let me get rid of this one. Yeah, well, we maintained a really nice uptrend, and then obviously with yesterday's action, we suddenly burst higher. I think we could be about to see a bit of profit taking, actually. I'm going to find a really decent trend line here where we get a few points all touching it think that's about as good as we're going to get. Okay, so yeah, maybe we do need to come back to this trend line. Maybe we are a little bit overextended. It is looking a bit like that. I'm not saying that this uptrend is going to break, most certainly not, but you can see that if tomorrow we start heading lower, we could get back to 82.65 over the next 48 hours or over the next 2 days session. And all that would be was a healthy correction in an uptrend. Take us back to good Fibonacci support, and trend line support around this 82.65, sort of 55 area. So I'd suggest that maybe we wait and see if we can buy it back down there, really. I mean, we are a bit overdone on the 4-hour stochastic, which you don't really want to, we certainly don't want to be buying into it here. If you're long, a bit of profit taking might not be a bad idea considering how overdone we are. And we have got fairly close to that 85 level. You can't rule out a go at 85, 00, 85, 25. You can't rule it out. It could happen. We've got some good momentum, but if I was along this, I'd probably be taking a little bit off the table at least, just holding a bit of profit back, just in case we do see a dip back to that. What did I say? 82.65 level. Yeah, I mean, I certainly would rule that out. So we'll have to be careful. Obviously, if we start breaking below there, then we've got some trouble because that's breaking the 3 week, not even 3 week, 2.5 week trend line. Okay, so that's probably enough said on that one. New Zealand dollar, euro versus the yen. That's probably going to be the last currency I do unless anyone else wants me to have a look at something. Losing my stochastic again. Okay. Weekly chart of the euro versus the yen, pushing higher. Okay, so we obviously had some, yeah, I remember this one from last time. Some good Fibonacci resistance around the 132.05. That held and held and held and held for, well, most of the summer, really. All of the summer, in fact. We started to blip above it last week, but we couldn't hold the break. And then this week, obviously, we've just torn higher. So we're on the next leg up on this euro versus the yen, I would suggest. Stick with the trend. Yeah, that's a quite interesting. Actually, I'll put the trend lines in the daily chart. Because, that looks quite interesting. Right. That's what I'm trying to do. Get a trend line on here. Okay, so wow, that trend line worked really well. Okay, so we know that was some Fibonacci resistance on the weekly chart. We also know that we were getting some sort of triangle pattern, which was a continuation pattern but needed to have a pause. There we go. There it is. We managed to hold above that 100-day moving average through most of the summer. Hang on, there we go. There it is. This dark line here, the brown line, pretty much held above the 100-day moving average, certainly through the end of August we did. We had a little blip below it, beginning of August, but second half of August we managed to hold above the 100-day moving average. We were in a consolidation pattern, the ranges were getting narrower. But as soon as we broke above it, we came back and tested it, textbook stuff. That was your buying opportunity. We've hovered around it for a few days, in fact. We really gave that trend line a good old test, and bang, we're through it now. So we've propelled ourselves off not only the trend line, but also that weekly Fibonacci resistance level at 132.05. The trend line is at 131.75. So okay, that 132.00, 131.75 area, good support. Now we've bounced off it. We should head higher. We should look for a target now. Are we through 134.37? Yes. No, we aren't. Okay, so we've got a little high here at 134.37. I'd say that's our first target. That actually looks like the high for 2010, in fact, right at the beginning of 2010. So that's a good little yearly high there, 134.37. I'd say that would be our first target. Oh no, we're through there. I beg your pardon, we're through there. 134.37, we're through there. Okay, so that's very positive. We've beaten the high for 2010. So we've beaten the high for 2013, 2012, and 2011 and 2010. So now we're looking for 138.50, I'd say. on a longer term basis, 138.50, 138.75 does look like a decent target for this euro versus the yen. I certainly wouldn't bet against it. It looks pretty positive to me. And I think we're looking any sell-off back to 130. Well, I don't think we'll see it now because we've really pushed high. But if we did see it back at 132.00, I would suggest that's probably a buying opportunity. So yeah, I'm quite positive on that one. I would certainly stick with that trend now that we've broken higher. Looks quite good, that one. Okay, so we've done the yen, we've done New Zealand, we've done the Aussie, we've done the Canadian, we've done the yen, we've done the euro, we've done cable. I think that's probably it for the currencies, unless anyone would like me to look at any more currencies. I shall have a quick look at the euro versus the yen, in case there's anything of interest here. Okay. Yeah, weekly chart, bit overbought. We've managed to retrace after a good sell-off into 2013 from the last half of 2012. So we've managed to recover a little bit, up to 119.35, but we can't push through 119.35, and that is quite important Fibonacci resistance. So that's a bit of a worry there. Maybe we aren't going to make it any higher. What's it saying on the daily chart? Yeah, daily chart saying we're due a correction. Don't fancy that. Fancy this at the moment. Looks like we're going to sell off a little bit. So now we've got to watch 118.36. Wouldn't be surprised to see it break 118.36 eventually. Whether it does it today or tomorrow, I don't know. But I do think it can go lower, and I wouldn't be surprised to see it down at 117.54. There you've got 100-day moving average and really nice Fibonacci support. So watch that level, 117.54. I would hopefully see a bounce off there. Wouldn't be surprised if that coincides with some sort of short-term trend line. Sort of. There's a little bit lower. Actually, the trend line comes in really nicely with a 100-day moving average actually at 117.07. So who knows, we may get as far as the low 117.00 area, but at the moment, probably it's had enough on the upside for the time being. So anyway, not many people trade that, so I'll move on. Gold. Gold's always a favourite. In a big downtrend, we all know that. That's the daily chart. I'm not even going to bother with the weekly chart. Big downtrend, good bounce. Now, look where we bounced last time. Okay, so from the high, 1795, we fell to 1180, and we managed a really good textbook bounce up to the 38.2 Fibonacci resistance level of 1415. We overran it quite a bit. If I blow this chart up, you can see. We overran it quite a bit to 1433, but we barely managed to close above it. We tried it on one day where we closed around that level, closed at 1418, okay? But anyway, you can see on that day we spiked higher, closed almost around the open, and that wasn't a particularly bullish sign, and we sold off. Okay, well, we were just holding around the 50% level, but anyway, yesterday we rocketed higher, needless to say. So now, we're sitting above the 100-day moving average, which is at 1348. We've made it back to this fib resistance at 1373. We're around there now. Excuse me. Let's throw a trend line on. There you go. That says it all, really. Okay, so we're now at quite a crucial point. I'm going to blow this up just to demonstrate the point. Make a mess of that. Here we go. Right. Okay, so the rally. Yeah. Nice uptrend from July, beginning of July. So what's that? August, September, 2-3 months, whatever. Well, it was a 2-month uptrend, 2.5 month uptrend, which was broken. We collapsed, but we blipped below the 50% fib level at 137.07 yesterday, but managed a very, very sharp recovery after our friend Ben Bernanke threw continued money at the market. And we've rallied up to very important resistance here, 1373, 1374. You've got the two intersecting trend lines. You've got the Fibonacci resistance level. So, yes, that is a target, and yes, that should be very tricky resistance. If we manage to push through here, we may just edge higher along this trend line up to sort of 1380. But we're really going to have to see a decisive close above this trend line now in order to start getting bullish again. So at the moment, if you happen to be long on that rally, you've done very, very well indeed. I would suggest it's possibly not worth running any further right now. I mean, stochastics wise, we've still got some room on the upside, but you know, the overall picture isn't that positive after don't forget, this uptrend here that we saw from the beginning of July was only correction in a bear trend. So yes, we had a nice correction. Yes, we had a nice 2-3 month rally, but we only got to 14.15, which was, you know, our first major challenge on a bounce in a bear market. So, you know, you've got to remember the bigger picture. We are in downtrends. That uptrend was just a bounce in a bear market. Now we've broken lower. Now we've managed to retrace to that trend line. So right here, right now, you've got to figure that this is possibly a selling opportunity. The only thing that I would be wary about is this stochastic looks quite bullish, but I mean, you know, stochastics is something that has to be used with other analysis and not just traded on their own. And anyway, the weekly stochastic, as you can see, I've just clicked onto this, is quite negative. So, you know, don't forget, we're in a bear market, and possibly this is now a selling opportunity here at 1374, 1375. What's the high today? 1375. Okay, so can't really say any more than that. You're going to have to really see it significantly through 1380 for me to start getting positive about it again. And then, yeah, maybe we would see it back up to 1415. Who knows, maybe even 1435. But for the time being, I think it's too risky to be long gold. Okay, on the subject of commodities, we're probably running out of time, are we? If we're not, I was going to look at stock markets, but they're all breaking high. S&P's hitting record highs, Dow Jones hitting record highs, DAX hitting record highs. I mean, you can't get in the way of that. It's a bull trend. So the other thing that's probably worth looking at while we're on the subject of commodities is oil. Not really gone anywhere when you look at the daily chart. Sort of an uptrend, but through the summer we kind of went sideways. We had that little spike up when we were all worried about Syria, and then we drifted lower again through September. But all in all, there's not really much going on here. We spiked high yesterday, but look, today's candle's actually quite negative again. Look, we tried to break. Well, there you go. There's a trend line for September. In fact, I'm going to put this in the 4-hour chart because that's probably a bit clearer. Okay, there we go. That is a bit clearer. So just looking back to September, we've got a little bit of a sort of consolidation going on here. You can see that with the trend lines that I've thrown on. They fit quite nicely here. So, okay, so yesterday we managed a nice big spike up to the upper trend line. It's only not even a month-long trend line, 3-4 weeks, but nevertheless doing its job. And we've plunged just recently this afternoon now on this one. So this is looking quite negative, really. We're sitting now below the 100. Okay, so we've reached the upper end of the range, really. So this is looking quite negative. 4-hour stochastics also turning quite negative on this recent sell-off this afternoon. Back to the daily chart, just to remind myself. Yeah, and look at this daily candle. So spiked higher. Looks like we're going to get a close below yesterday's close. So all in all, that's looking like a short-term wise, not too positive. We might sell off back to that 160, 106.5, 106.00 area in crude oil, I would guess. Yeah, we're going to really have to see a close above today's high, 108.99. They're a bit of a mixed bag and not really going anywhere off. Sell back off again and test recent lows. Wouldn't actually be surprised to see it get back down to that 105.5 area, 105.00 area. Yeah, it looks like yesterday gave us a bit of selling opportunity in that one. I'll just have a look at Brent, see if that backs it up. These two don't trade particularly well correlated, but yeah, again, that's not looking too good. Brent's just starting to get into a bit of a bear trend here, and today's candle again sort of negating. Well, it's certainly not positive after yesterday's. We're not getting any follow through at all in Brent, so it kind of backs up. Okay, we've got to wrap it up, I think. Thanks very much indeed. Sorry about the sound problems, but thanks for joining me. I hope that was of some help. If you want to get hold of me, my website is daytradeideas.co.uk. So happy to help you if you get a hold of me there. Thanks very much indeed. Until next time.